Is LVMH stock a smart buy right now? Welcome to Global Value, and in this video, we're going to dive deep into a fundamental analysis of LVMH Moët Hennessy Louis Vuitton stock. We'll use methods from Warren Buffett, one of the greatest investors of all time. We'll study the key numbers that Buffett values most, and then we'll figure out 3 different prices for LVMH to really understand what it's worth in today's market. Stay with me till the end because our final fair value and rating might just surprise you. And there's more. I'll also share a special bonus that could be the deciding factor when adding LVMH stock to your portfolio. So is LVMH a great chance to make money? Let's find out together. Right now, LVMH stock on American exchanges trades for $144.85 per share. This last year has not been great to the company's stock price. It's down 17%. This comes as the market is nearing its all-time highs with the S&P 500 up more than 20%. In the last handful of years, it's a totally different story. LVMH is compounding at 18% annually. They crush the market. In the last decade, it's pretty similar. They compound at 15% annually, also beating the market. And no surprise, when we go back before the global financial crisis, this is the same case. They've compounded at 13% annually in the last 19 years. These have been great returns for shareholders. Now the burning question is, why should we be paying close attention to LVMH? Right now the company trades just $6 above its 52-week low. This comes as they're more than $50 below their 52-week high. And how big is LVMH? They're absolutely huge. The largest luxury goods brands company in the world. They have a $358.5 billion market cap. What does the company actually do? LVMH is a global producer and distributor of luxury goods. It operates 6 segments: fashion and leather goods, its largest and its oldest, watches and jewelry, wine and spirits, perfumes and cosmetics, selective retailing, which includes Sephora and airport duty-free retailer DFS, and their other segment, which includes publishing. Higher profile brands include Louis Vuitton, Bulgari, Fendi, Givenchy, Tag Heuer, Hennessy, Moët and Chandon, Glenmorangie, Sephora, and Benefit. LVMH operates more than 5,000 stores around the globe. Succession planning is on the mind of Bernard Arnault, one of the world's richest men and the CEO of LVMH. He just nominated 2 of his younger sons to join the LVMH board. This gives 4 board seats to his children, all 5 of which head key parts of the LVMH business. Now with that understanding, let's dive deep into the numbers that Warren Buffett cares about. This step-by-step checklist-style approach reverse engineers how Warren Buffett would look at a company's numbers. It gives you one of the best shots of finding undervalued, high-quality stocks that can beat the market and make you a lot of money in the process. Getting started with metric number 1, we want their average returns on capital to be above 14%. This helps us understand how much money the company makes for everything invested into it. Over a few decades, you can expect to get around a company's return on capital numbers as your overall returns from their stock. That's why this is so important. LVMH earns high, stable returns on capital through most of these years. 2020 was their low when they earned 10%, but the rest of these were in the upper teens or toward the low 20%. When averaged out, LVMH earns 17.4% returns in a given year over this time. That's a few points above the benchmark we look for. It's also double a regular company. This is a solid check on metric number 1. We want sales, earnings, and free cash flow growth in our second metric. Simply put, it's harder to make mistakes investing into a growing business with high returns. In this time, LVMH has grown their sales by 72% when we include today's numbers. Their earnings are up by more than 2.5 times, and the company's free cash flows have nearly doubled as well. This is strong growth across the board, exactly what we want to see coupled with these high returns on capital. It's our second check in a row. LVMH is starting off strong. Next, we're taking the view of an individual shareholder. We want to see earnings per share growth. Not only have their earnings really gone up over this time, they've also kept shares just about flat with less than 0.5% of share buybacks. They brought in $30.01 in 2022. In their last 12 months, they brought in $34.89. It's strong growth above their numbers from any of these other years, and it's another check on metric number 3. So far, LVMH is perfect to start. Can they keep this up? In our fourth metric, we look for something similar but even more important. We want free cash flow per share growth. This is because free cash flows are the lifeblood of any business. Ultimately, most companies, including LVMH, are valued on the sum of their future cash flows discounted back till today. This is why it's great to see growing free cash flows per share over this time. In their last 12 months, LVMH brought in $22.98 worth. It's yet another check on metric number 4. LVMH is perfect so far. Before we look at the company's debt and figure out what they're worth, why don't we check in on our bonus? Right now, LVMH pays a 1.9% dividend yield, but is it safe? That's why in our bonus we want their cash flows to cover their dividends. This has been the case in all 5 of the last years, and it's also the case today. While they haven't grown their dividends up and to the right over this time, they have grown overall. If you like dividend growth stocks, it's good to see that they're returning some of this capital to shareholders. It's exactly what we want. This is a check on our bonus. Now, wonderful companies can grow and earn high returns without using a lot of debt, and we want to see if that's true for LVMH. In recessions, it's businesses with too much debt that can have the biggest losses and even go bankrupt. You don't want to invest into broke companies. That's why we want their net debt to be below the sum of their free cash flows. In this time, LVMH has increased their debt. This might not be a surprise as interest rates have been pretty low historically in the last handful of years. Today, LVMH has $30.5 billion of debt, and in the last 5 years, they brought in more than $60 billion of free cash flow. That's double their debt position. It means LVMH can comfortably and easily support their debt loads. They could pay all of this debt off with just about 2 years worth of free cash flows. That's great, and it's yet another check on metric number 5. Flawless through our first 5 metrics, does LVMH have what it takes to go 6 for 6 on our analysis and be a perfect select 6 stock? Why don't we find out as we figure out how much they're worth? The big metric of them all, metric number 6, we want their average free cash flow divided by their enterprise value to give us a yield above 5%. This is the first of 3 different ways we'll use their free cash flows to value the business. Historically, the S&P 500 trades around a 5% free cash flow yield. But free cash flows can be lumpy year to year, that's why we're taking an average here. When we add their net debt and their market cap together, we get enterprise value, which helps us look at LVMH more like it's a private company. Today, LVMH has a $391 billion enterprise value. In their last 5 years, they brought in $12 billion of free cash flow in an average year over this time. When we divide that by their enterprise value, we get a 3% average free cash flow yield. Today, they brought in $12.3 billion of free cash flow in their last 12 months. When that's divided by their enterprise value, it gives us a 3.1% current free cash flow yield. These both come in below the 5% benchmark we were looking for. This means coming in all the way on metric number 6, it's our first and only X of the day for LVMH. Don't just throw this business out. It's one of the best performing companies of all time, and its owner is one of the world's richest men. Watch for our next 2 valuation estimates before you stay for our final fair value and rating, which just might surprise you. Everything we've covered so far is important, but there's something missing. We haven't looked at how their free cash flows may grow into the future. Here, we'll use a DCF valuation to remedy this. LVMH has been very predictable in their past, so we can take an average of their 3 years of free cash flow and then grow these into the future using historical assumptions. That it's up to you to figure out if they're accurate or not. If we think their free cash flows grow at 12% in each of the next 10 years and then in the following decade, because this is a luxury goods company and they have such a huge historic track record, if we assume that these grow at 9%, after that we're going to add in their tangible book value to help us get an estimate of their net worth. If we want a market-beating 15% rate of return, which is what Warren Buffett wants from his investments, right now a DCF estimate for LVMH is around $78 per share. Keep some key points in mind. The company trades just slightly above their median price to owner earnings in the past decade. Right now this comes in at 23.5 times when their median is around 22 times. They're also above their median EV to free cash flow ratio of 30 times, but this has traded as low as 19.5 times. This would line up with that 5% mark we looked at earlier. We'll factor in an adjustment of their Guru Focus value as our third estimate. Right now this comes in at $190 per share with a modestly undervalued rating. If you want to learn more about our fair value method, get the free resource from our Patreon linked down below in the description. Today, LVMH may look attractive based on a few different valuation methods for the company. Although it's out ahead of its Peter Lynch value and its median price to sales value, some of these others may look good. Now, this far in our fundamental stock analysis of LVMH, we learned they go 5 for 6 on the Select 6 analysis. They have all the signs of being a wonderful business that warrants their storied track record. Their valuation was the only thing that looked off today compared to Treasury yields. This analysis isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. When we combine our 3 valuation estimates, today a fair value for LVMH looks like it's around $127 per share. Fair values will range on either side of that, but it's only $17 below their current stock price. They traded at those levels in October of 2022, so just be patient. If you enjoyed today's LVMH stock analysis, like it, share your thoughts in the comments, subscribe to the channel for more, and watch this next video. You may enjoy it too.